Good evening, friends. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. As we speak, Treasury Consulting is a multi asset, multinational hedge fund. By multi asset, I mean we actively covering multiple asset classes like gold, silver, platinum, palladium, base metals, agriculture commodities, and many. By multinational, I mean we actively cover multiple locations like United States, Europe, and Asia Pacific region. God willing, soon our fund would be adding two more asset classes, one from Singapore, one from Switzerland. In Singapore, we would be adding DLC, daily leverage certificates, while in Switzerland, we would be adding factor certificates. Preparations are going on, and very soon we would be adding these two asset classes in our kitty. But, like I repeated many times, and I would continue to repeat in all of my videos, that we are a proprietary hedge fund. By proprietary, I mean we do not take third party capital. Treasury Consulting and none of the subsidiaries of Treasury Consulting take third party capital. Please do take a note of that. This video is by our crypto learning platform. I repeat, crypto learning platform. Our crypto trading platform is closed for public. Like I said, no third party, no outsider can enter in our crypto trading platform. Yes, if you wish to enter in our learning platforms, you can enter where we teach training, video courses, audio courses, daily updates, and all these things which we are doing. Guys, forecast is the most difficult thing in the life. And one thing which I learned is that when you make forecast, people always laugh. But you should not be bothered about them. That's a crux which you need to learn in your life. Around 1.5 years ago, in the public domain, I told that this crypto platform, which is moving up, 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 and people in the social media, the corrupt media institutions, they are claiming that this relevant exchange is 30 billion, this relevant exchange is 20 billion. I was always wondering that how can in a span of 1 year, 2 year, 3 year, any entity can turn out to be a 30 billion entity, especially when the credentials of this entity, the balance sheet of this entity, the P&L of this entity is not in public. And I regularly came in public domain and expressed my opinions. To me, it always hardly matters whether how many views, dislike, comments, subscribers I am getting, because I understand that the kind of content I am putting in the system is a very different content. It is not a political content. It is not targeting political people. It is not a communal content. It is not a religious content. So, common sense, I have less viewers for my content because it is business based, market based content. No politics, religion, sentiments, communal, and all these kind of things we ever discussed. Around 3 to 4 days ago, when the so-called Warren Buffett of crypto market SBF, I called him Warren Buffett because I have the evidence that media called him Warren Buffett. So when media called him Warren Buffett, the bankman fried SBF, his full name shortcut. When media called him Warren Buffett, I have privilege to call him Warren Buffett as well. Now, when 3 to 4 days ago he came in public domain and said that there are some issues which we have in the FTX, for that we need funding. Okay, immediately, according to public information, in the last 3 to 4 days, around 6 billion US dollars. You heard me very right. 6 billion US dollars being withdrawn from, from FTX. 6 billion, which is definitely not a small amount. If anyone think it is a small amount, then please also make me understand how this is a small amount. Around 2 days ago, Binance came into the picture and said that they signed non-binding letter of intent with FTX. Now, non-binding letter of intent means that, in very simplistic language of the law, that I am evaluating your product, your asset class, which you wish to sell, but I am not giving in writing that I would be buying this. If my due diligence, gave me a positive result, if we agree at a price, whatever terms and condition, carve outs and all, we will definitely buy this, else we are not going to be buying this is called non binding letter of intent. One is called binding letter of intent, which means if you signed it, it means you have to honor it. Now if you do not honor it, the people will go to court. This is called binding. But Binance is smart. Binance signed non-binding agreement, which means we are evaluating, which is a good strategy. Whenever you evaluate and you are not sure whether your evaluation will reach at that level, whether your evaluation will fulfill your desire, always sign non-binding letter of intent. Always. Now, here today, which is, you know, here today, which is 10th November 2022, we are getting a nuclear bomb, not on the world, but on the crypto market. The nuclear bomb is that FTC made it very clear that it is moving to FTX, made it very clear that it is moving towards bankruptcy without 8 billion after Binance pulls out. It means Binance pulls out from the deal. Binance probably, I don't know for what reasons Binance pulls out, whether the valuation was an issue, whether some the revelation in the balance sheet is an issue, or whether maybe, because the FTX balance sheet is not in public, so it is almost impossible to comment on this. But there is something because of which Binance is not in the game anymore. According to few articles, many exchanges already withdrawn. So Binance was the only hope left for FTX as we speak. The beauty is Binance, FTX is backed by Sequoia Capital, BlackRock, Tiger Global, and SoftBank. SoftBank is already in big trouble. We all know about that. According to public information, around 30% of the workforce of SoftBank asked to step down. They are taking huge losses in their books, and now FTX. According to the information which is available on a website, and I already took a printout of that, you know, SBF told investors on Wednesday, which means yesterday, that without a cash injection, the company would be filed for a bankruptcy. Very good. So, 2 months ago, he was the Warren Buffett of the crypto market. After 2 months, he is moving towards bankruptcy. This is yet another example. I repeat, this is yet another example till what extent the media is compromised in our world. I repeat, till what extent the media is compromised in our world. And I'm sure that thousands, rather millions of investors in the world would have invested in this FTX crypto exchange thanks to the hype by our beloved media. If I go with the article, on a call before Binance pulled an about face and dropped its takeover offer. In English, about face means that you are not interested. This is the English meaning. SPF informed investors. Investors means the fund houses, those who invested, just like I told you, Sequoia Capital, BlackRock, Tiger Global, and you know Sequoia, BlackRock, Tiger Global, and SoftBank. So SPF told investors, you know, that his crypto exchange faced a shortfall up to 8 billion US dollar. 8 billion. Can any investigation agency in the whole universe check what the hell he did, which ends up having 8 billion as a shortfall? 8 billion. It's not 8 million or probably 80 million. 8 billion. And needed 4 billion to remain solvent. 4 billion. SBF, who was considered as Warren Buffett, would definitely did something big in his crypto exchange, because of which there is a shortfall of 8 billion. I'm sure people across the globe are definitely investigating. People, those who have some documents which are not in public, they must be investigating that how come this is 8 billion dollars. The acknowledgement of his company deepening troubles and limited option is a stunning turn for the crypto industry. And there was a point of time he was $26 billion richer. $26 billion richer. And he was considered as the JP Morgan of the cryptocurrency. JP Morgan means the person who formed JP Morgan Bank. His full name is John Pierpont Morgan, shortly called JP Morgan. The beauty of the game is slower and steadier. The fake crypto exchanges are coming to an end. Example, we have seen the Celsius, Voyager, let they all went bankrupt. Billions of dollars of client money is currently at stake. Billions of dollars of client money at stake. The beauty is FTX is having investors like Sequoia, BlackRock, Tiger Global, SoftBank, and according to public information, Sequoia wrote down the full value of its holding in FTX.com and FTX.us, which practically means that Sequoia do not see any clear path of resolving as far as his investment is concerned. I'm checking on internet how much is the write off done by Sequoia, but please give me some time to have the detailed information in that regards. But some information I have. Securities and Exchange Commission of United States, Commodities Future Trading Commission CFTC of United States are investigating whether the company properly handled the client funds as well as its relationship with other parts of Mr. SBF crypto empire, including his trading house Alameda Research. So, Securities and Exchange Commission and CFTC have started their investigation. Officials from US Justice Department is also working with SEC in that regards. Now, it clearly means that very soon we will have an information which is which is not available today, but like we are covering FTX very thoroughly, one thing which is very clear that FTX is moving towards either bankruptcy or a complete takeover. What I can see that if the owner of the exchange is saying that he needs $8 billion because of the gap in the balance sheet and probably $4 billion as to remain solvent, it means his valuation is almost zero. His valuation is almost zero. This is something I can say. It also reminds us one thing, which is all those who standing at huge valuations, all those who standing at wavered valuation, all those who standing at fake valuations, slowly and eventually they came to an end. This is the law of natural justice, the law of nature. The corrupt media, especially I can say Bloomberg, who hyped FTX 2 to 3 months ago, rather, one of the person interviewed him as well to give him sufficient hype. At one given point of time, he was considered as Warren Buffett and JP Morgan, standing at $26 billion worth of valuation, is now zero. The point is not zero. The point is the people who invested their money in that exchange, people who invested their money in exchange, they are bound to lose. This is the most important concern for me. This person should not be let scot free at any point of time. This person should not be let scot free at any point of time. This is what I can say. Of course, we would be covering this topic in detail as the time would progress. This is Rahul Magan from Treasury Consulting Group. You knew my personal number 9899242978. Let me repeat 9899242978. Have a great time ahead, guys, and please keep chasing the Warren Buffett and JP Morgan created by our beloved corrupt media. Have a great time ahead.